Hey guys, welcome back. I hope you had a really great day trading today. So today was Wednesday, September 4th, and we did open SPY down right at the 50-day moving average, and then from there we did come up and we took it to the green, and it was not a straight line to get into the green. You could see we opened down here the first candle. This is on the 30-minute time frame, and we closed it up here. And then we opened the second candle right here, but you can see this long wick. So we did actually take it all the way back down to the 50-day moving average before swinging back up into the green. So there was actually quite a bit of volatility in these first three candles. And then from there, we did trade back down to the 50-day moving average into the end of the day. And then we saw a little bounce on that level. So we did get a sideways day after that big drop yesterday, and the 50-day moving average is where we settled. Not surprisingly, that is a big level, and just underneath that we did have this big gap, and that gap is, I should know this as much as I go over this, the consumer spending gap. So we are trying to find support on the 50-day moving average. It was definitely very weak though. Halfway through the day, we did get a bearish cross down right here in the 35 EMA, crossing underneath the 30-minute 200 moving average. And when it did cross up, we did see that big squeeze. So the last cross up was right here. That was August 14th. And then that's when we saw that big rally back up to all-time highs. And then today we did get a cross back down. And then I'm going to take it even further back here and show where we saw the last bearish cross. And that was right here. This was July 19th. And we saw that cross down. And then the very next day, we actually did see a bullish move up to the 30-minute 200 moving average, and then that's where we saw resistance. And then after that, the 30-minute 200 moving average was resistance again. So really, if we do see an up day, we could see a swing back up to the 30-minute 200 moving average. A big up day tomorrow would definitely not signal a bullish reversal. We did see a bearish cross down here, so keep that in mind. As long as the 35 EMA is underneath the 30-minute 200 moving average, we are bearish on this time frame. And SPX, we did see the same thing. We dropped down to the 50-day moving average at open. The top of this gap was actually aligned here pretty much perfectly with that 50-day moving average. In SPY, there is a little bit of a gap in between those two, but those two levels caught us today at open. We did come back up. We closed that gap right away, and then you can see, I'm going to zoom in, it's hard to see, but that wick, that long wick, so we opened here, close the gap within that first candle, then we open the second candle here, dropped back down to the 50-day moving average before pulling all the way back up into the green, and then we traded sideways and down back to the 50-day moving average. So right here, we actually saw that bearish cross in yesterday's trading range. And actually, I'm recalling, we didn't actually see the full cross down. That came today with that first candle. So we touched down to the 30-minute 200 moving average with the 35 EMA at close yesterday, and today we got that follow through. SPY did close down today 0.2%. SPX closed down 0.16%. VIX came up 3% today, and we did stay completely within the implied move in both SPY and SPX. And then QQQ, we did open here also with a gap down, and then we came back up. We also saw a lot of volatility in the first three candles here. So we opened here the first candle, took it to the 4-hour 200 moving average right here, got a little bit above it, dropped down. You could see that long wick actually took us underneath the low of the first candle, and then we swung back up to get back into the green, and we saw resistance right at this downward facing 1-hour 200 moving average. When I say that a downward facing moving average is going to cause trouble, this is what I mean right here. We see rejection here and here before getting pushed back down, and the 4-hour 200 moving average, which is pointing up, did catch us. So QQQ closed down 0.26%. VXN closed up 2.59%. And here we also did stay within the implied move. And VXN is 25. Volatility at 25 is so much fun. And we really did see, I can drop that down to the 5-minute time frame, and you could see that we opened with that gap down, came back up and almost filled the gap, dropped back down, came back up, saw resistance at the 1 hour 200 moving average. So when volatility is up, things usually don't move in a straight line in one direction. We were definitely all over the place today. So that was QQQ, and then taking it to IWM. And we did open here with a gap down to the 50-day moving average as well. And then we did see a bounce there, and then we came back up. That second candle, you could see that we did drop back down, so we did see a lot of volatility in those first two candles. So we dropped back down, we got underneath the 50-day moving average before getting pulled back up. We saw resistance at the 30-minute 200 moving average, then we dropped back down. The 1 hour 200 moving average had that downward momentum right here, and we did trade along it in the middle of the day. Couldn't get above it and dropped back down to the 50-day moving average. So the upward momentum of the 50-day moving average did catch us, and the downward momentum of the 1 hour 200 moving average did pull us back down when we tried to get above it. We also saw a bearish cross down right here today towards the end of the day. This was in the last two candles, so that's power hour right here. And you could see that we did see the cross up right here. That was August 16th. And then this cross down today just concluded that bullish run. So let's look back here. The last time we did see a cross down, and of course we need to see a follow through. So tomorrow we need to pull this down even further, because the initial cross down, that could always be a place that we bounce. But if we see a pull down underneath, that 35 EMA actually closes tomorrow underneath the 30-minute 200 moving average, then we have gone bearish here. And the last time we did drop, the last time we crossed that 35 EMA underneath the 30-minute 200 moving average was right here. After that, we did get that big drop. So it's actually one of the most reliable signals, and we did get that cross down today. IWM did close down 0.17%. RVX closed up 1.81%, and we did stay within the implied move today. And I just want to add to the previous statement that I said about being bearish here. It doesn't mean that we can't swing up. It's just that, think of this 30-minute 200 moving average. If we do have an up day tomorrow and we bring it all the way up to the 30-minute 200 moving average, think of this as resistance. It's support when the 35 EMA is above, and it's resistance when it's underneath. And so far today we already saw it as resistance, just as the 35 EMA was coming down at the 30-minute 200 moving average. So as of right now, it's already resistance, but now we got this, and if we get a follow through tomorrow, then that 30-minute 200 moving average needs to be looked at as a resistance. And definitely while this 1 hour is pointing down. And then DIA. We did have a very flat day in DIA today from where we opened to where we closed, and we did open pretty flat as well. And from there, we did come up to the 35 EMA, almost to the penny. That's where we saw resistance, and we dropped it down to the 30-minute 200 moving average. This is why it's so important to know where these levels are, and especially across time frames. That's why I do have the moving averages from different time frames on one chart, and that's not necessarily relevant here, but 200 moving averages across time frames are always going to be a level of interest. And you could see once we bounced off that 30-minute 200 moving average, we got right back into the bottom of the implied move for the week. So 410 was what we got at the beginning of the week as the bottom of the implied move for the week. And so far, we're still in there at the very bottom. So 410, and we closed today at 410.42. All right, so that was today. We did see a lot of slow technical bounces off of levels that were on our chart, and it seemed like a day where the market was regrouping after that big drop to start the month. And I rambled enough about today. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. If you have any questions at all, leave me a comment. And if you took a really great trade today and you want to say thank you and buy me a coffee, don't be afraid of that thank you button. That does keep the content coming, and I really do appreciate it. All right, so heading into tomorrow, the implied move in SPY is between 546 and 556, and that is from options. The 30-day average volatility is twice as wide, 540 to 561, and the implied move on Friday's contract is between 542 and 559. And to the upside, the very first level to look for is going to be this 35 EMA. We just had a bearish cross down of the 35 EMA underneath the 30-minute 200 moving average. That is a bearish signal. So definitely look to that level as our first level of resistance. If we do get above that, then today's high was at 554. That is where we saw resistance when we bounced off the 50-day moving average. So 554, and then 556 is the top of the implied move for tomorrow. 559 is the top of the implied move on Friday's contract. That is a big difference. So the market is definitely expecting higher than average volatility to close the week. And then 559 is the top of the implied move on Friday's contract. And then at the very top of the trading range for tomorrow, we do have this down gap that we started the week with. This was on Tuesday, and remember we did have a shortened week this week. So Monday was closed, Tuesday we gapped down. That's at the very top of our trading range for tomorrow. And I haven't mentioned this yet, but tomorrow we do have the Fed Beige book at 2 p.m. And that is a quarterly publication of economic conditions that definitely does have the potential to move the market. So I like to have my trades closed out by 2, or at least the ones that I start the day with, and then see what happens with the Fed Beige book to possibly put on another trade. And then to the downside, just underneath where we closed today, we have the 50-day moving average. That level did catch us today and yesterday, so after that big drop, we do see that long wick. This was on Tuesday, and that 50-day moving average brought us back up. Today we opened at the 50-day moving average and bounced up, but we closed right above it, so 50-day moving average definitely needs to be a level on your chart. If we do break it, then underneath us we have the consumer spending gap from last month with the 1 hour 200 moving average running through it. Now the 50-day moving average is the same level as the 2 hour 200 moving average, and this is a higher time frame than the 1 hour, and that is also bearish. So once we broke underneath the 30-minute 200 moving average, we're looking for the next moving average, which just happens to be the 1 hour. So it's definitely possible that we skip over the 50-day moving average. We did see a technical bounce here, but we might be trying to settle on the 1 hour down here, which is near the bottom of the implied move for tomorrow, which is 546. Then the bottom of the implied move on Friday's contract is 542. Just above that is the bottom of that up gap from consumer spending last month, and that is just under 544. And then underneath that, just to find one more level, we do have the 4 hour 200 moving average with last month's PPI CPI gap So if we do drop and you're looking a little bit further out than tomorrow and Friday, then maybe look to that 4-hour 200 moving average and that inflation data gap. So pretty intense trading range tomorrow. It doesn't look difficult. It's just a lot to know of where it is. And then SPX, the implied move over here for tomorrow is between 54.70 and 55.70. That is from options. The 30-day average volatility is twice as wide, 54.10 to 56.25, and the implied move on Friday's contract is between 54.40 and 5600. And that is a big jump between tomorrow's implied move and Friday's implied move. And to the upside, the first level to look for, 35 EMA. And I think at this point we've all seen how cleanly the 35 EMA can act as a resistance. If we do get above it tomorrow and print a blue candle here, then look to 55.70 as the top of the implied move. 5600 is the top of Friday's implied move, and then we have the 30-minute 200 moving average at the top of the next 2 days implied moves. And because we did take that 35 EMA underneath the 30-minute 200 moving average today, or let's say this week, because I think this actually happened at the very last candle on Tuesday, but it doesn't matter when. We did get that cross down and the follow through. So if we do take it to the 30-minute 200 moving average, look to that level as resistance, especially since the 1 hour is still trading underneath the 2 hour. And then at the very top of the trading range for tomorrow, we do have that down gap that we started the week with. That is just underneath that gap that we haven't been able to fill, that the last 10 days we have been trying to fill, and just underneath all-time highs. So that is the upside. And then to the downside, 50-day moving average, we did see a bounce on that level on Tuesday, on the first day of this trading week after that big drop. Then today we opened with a drop down to the 50-day moving average and bounced, and then we closed the day with a little bounce off of that level. So without a doubt, we will be seeing that tomorrow, and how that reacts will be important in where we go. So 50-day moving average underneath us, then we have the consumer spending gap underneath that with the 1 hour 200 moving average running through it. And again here, we dropped underneath the 30-minute 200 moving average. We took a quick break at the 2 hour 200 moving average, also known as the 50-day moving average. And a lot of times the market will go and find the next one in order. So we dropped through the 30-minute. Now we're trying to look for that 1 hour and see if we can find support there. And that is near the bottom of the implied move, which is 54.70. 54.40 on Friday's contract, and then underneath all of that we do have the 4 hour 200 moving average with the inflation gap from last month. This is where we saw an up gap right before PPI and CPI, and right before that consumer spending gap, which we are just above right now. So some interesting levels to the downside. Place your bets on where we bounce, and then taking it over to QQQ. The implied move tomorrow is between 455 and 467, and that is from options. And the 30-day average volatility is between 448 to 473. And then on Friday's contract, the implied move is 454 to 470. And to the upside, we do have the 4 hour 200 moving average. And I am going to take out these arrows. They are in the way. So right above where we closed is the 4 hour 200 moving average. The momentum there is still up. We have not turned that moving average yet. So if we do drop tomorrow, we may not drop too far. And if we do get above it, we have the 1 hour 200 moving average. So if we pop up tomorrow, we may not get too far. We have two different momentums. And even today, we just stayed kind of between the two levels. But if we do get above all of that, 35 EMA is just above that too. That is cutting right through the trading range. Starting to look pretty wild for tomorrow. Top of the implied move, 467. and 470 on Friday's contract. And at the very top of the trading range, we have an insane amount of resistance. We have the 30-minute 200 moving average, which is starting to go flat. The 50-day moving average, which has turned down, that is bearish. We have 474, that was a previous support turned resistance, and then we had a battle to reclaim that last week as a support, but we lost it. And then above that, we have the down gap from the beginning of this week. So that definitely looks dangerous. And then to the downside, the next level that we have is, first of all, the bottom of the implied move for tomorrow is 455. And I think I have that off just a little bit. That's right here. So 455 is the bottom of the implied move, and it is within this gap right here. We do have a down gap and an up gap. That is an island bottom, and we did have a little bit of the Amazon earnings gap right here left. We actually gapped into that gap and closed the upside of it out, but left a little bit of this gap right here. So island bottom gaps do tend to be a battle zone, so expect a little fight down here if we get down there. And 454 is the bottom of the implied move on Friday's contract. Underneath that, we do have the weekly 35 EMA. And I do want to take it to the weekly time frame because the weekly 35 EMA has defined the uptrend since the beginning of last year. So this is where we found bottom in 2022. In January, we got above the 200-week moving average and then above the 35 EMA on the weekly time frame. And you could see that we then rallied, and then when we dropped back down to the 35 EMA, we bounced again. We dropped back down to the 35 EMA, back up, and then we did just recently drop underneath that 35 EMA, but we did manage to get above that level with a bounce, and we did make lower highs here. And that 35 EMA is a critical level on a long trend term for the long trend. And if we look before, this was at the top of 2021. This was the COVID rally, and as soon as we got underneath that 35 EMA, which also defined the trend back then, you could see every time we came near it, we bounced. Here we came near it, then we bounced, and here we came near it, and we bounced. Once we got underneath, it was resistance, and that is what took us down all the way down to the 200-week moving average. All right, so let's get back to the day trading time frame here. So that 35 EMA is underneath the trading range for the next 2 days. So definitely looks like a dangerous trading range. Lots of points of interest. Definitely this gap at the bottom side here. And then this is just my opinion, but I feel like we probably won't get above much of this. But let's see what happens. And IWM, the implied move over here for tomorrow is between 210 and 217. That is from options. The 30-day average volatility is a little bit wider, 208 to 218. And believe it or not, the implied move on Friday's contract is wider than the 30-day average volatility, and it's at 207 to 219. And to the upside, first level to look for is going to be the 1 hour 200 moving average. The momentum there is down, and I don't think we're going to be turning that level anytime soon. So if we do get above it, I would expect to see a little bit of flat, definitely not a huge bounce. Above that, we have the 35 EMA. That is right here. And today, the 35 EMA crossed underneath the 30-minute 200 moving average. That is bearish. So if we get above the 35 EMA, look to this 30-minute 200 moving average as resistance. 217 is the top of the implied move on tomorrow's contract. 219 is the top of the implied move on Friday's contract. Above all of that, we have the down gap that we started the week with. And to the downside, 50-day moving average. You could see we did see a bounce there today, and we closed just a little bit above that level. If we do lose it tomorrow, look to 211. That is The long time support and resistance, we did see 211 as support after the COVID rally. And then in 2022, when we dropped underneath it, that was resistance. Then we saw it as resistance in March. Lately, we did get above it with that big breakout, but we are definitely having difficulty holding that level. And then underneath that, let's get back to the 30-minute here. So that was 211 right here. 210 is the bottom of the implied move for tomorrow, and then 207 on Friday's contract. And then we do have the battle zone underneath that. This is off of the bottom of that big drop we saw a few weeks ago. We bounced off the 1 week 35 EMA, got back above the 4-hour 200 moving average, and then we gapped up. And we actually gapped up over a little piece of that down gap that didn't fill. So we do have an island bottom right here. Definitely look to that level as a battle zone. And then the 4-hour 200 moving average is just underneath that gap. So if we do end up closing that gap, look for a technical bounce because that 4-hour 200 moving average is right there. All right, wow, look at that. Anyway, DIA. The implied move for tomorrow is between 404 and 417, and that is from options. And the implied move on the week that we took from the start of the week is between 410 and 422. So far, the first 2 trading days of the week, we have managed to close within the weekly implied move. And then to the upside, the first level to look for is going to be that 35 EMA. We did see that as resistance today. And if we do get above that, then the next level to look for is the top of the implied move and 217, and then that has the the down gap from the start of this week. And then to the downside, 30-minute 200 moving average, and we did see support there. This is today. No, this was Tuesday, first day of this week. We did see a bounce there, and then today we bounced right on that 30-minute 200 moving average. On Monday, it was more this Jackson Hole gap that caught us right there with that 30-minute underneath us. Today, the 30-minute caught us. DIA is the only one that has not gone bearish yet. So the 35 EMA is still above the 30-minute 200 moving average. That could potentially change tomorrow. With everything else heading into the bearish, with everything else heading into bear country, DIA may follow suit and break underneath. And if we do break the 30-minute 200 moving average, we do have that Jackson Hole gap to fill. So the support with that gap would be around 407. And at the bottom of the implied move at 404, we have the 1-hour 200 moving average. And just to look a little bit deeper, if you are looking into next week, the 50-day moving average with the island top gap, and we have, this was that super silly gap where we actually had this up gap that went further back, but we closed that out, and then the next day created a new up gap with this down gap. So this level has seen a lot of action over the past month. You can see how many gaps. It's pretty consistent right here. We have returned to this level over and over. So that is just underneath us. It wouldn't surprise me to find ourselves in that gap. The 50-day moving average is there, which could pull us in as well. And that's all I've got tonight. This thunderstorm is making me so sleepy, and if you guys see anything else, let me know. That's all I've got. So have fun tomorrow, trade safe, make sure you take profits when not.